Hi, everyone. My name is Phil Brancato, and I'm CEO and President of Vladimir Kalman Asset Management, Chief Market Strategist for Jose. Special guest this week, I'll bring him on in just a few minutes here. A really different kind of guest this month, so I'm very excited to have a new buddy on. I just thought I'd start off with my crazy life right now. So many of you who follow me know, I do a lot with. I'm always traveling somewhere, but this week is a interesting week. I start off in South Carolina. I've never been here, Palm, South Carolina. It's very pretty. And then I'm here for a couple of days. And then I head to Georgia. Why? Because it's graduation week. And so next week's special guest will be my daughter, Luca. She will join me live. So we're going to ask her about what her college experience was like and as she goes into the world of finance. And you guys, I know so many people have asked to meet her. So we finally have the chance to do that. And I'll get her on next week. Fun and interesting times in markets. It's amazing right now how up and down things are. Oh, my weekend. I didn't talk about the weekend. I always talk about my weekend. So a lot of you know, I get so many questions about the tomatoes that I plant every year in the big gigantic garden, and it's full on right now. Well, my nephew Mark, who helps me with my garden, was away for the weekend. So the last 2 weekends, I've had to do most of it on my own. My buddy David was going to come up from the Jersey Shore and help me, but I felt bad asking him. So I spent all day Saturday moving 2 truckloads of mushroom mulch or mushroom compost, really dark, very nutrient rich stuff. I needed it. And then put all that stuff in, fertilize the ground. Because, when you plant every year in the same spot, the ground does run short of nutrients. So this year was a year of upping the soil a little bit. And it's a long story. One of the two gardens had some extra dirt added to it a few years back, which wasn't the best dirt, even though tomatoes are doing great. I needed to kind of work on that soil. So all last weekend, I built for a friend and slash neighbor a big garden box, filled that with soil, and worked on the garden. This weekend, all day Saturday, and Sunday, my sister, who happens to live in one of the two houses where we grow the garden, came to me and said, "Hey, I really need a favor. I got to take some trees out." Well, sure enough, not some. It was 10 pine trees that were completely dead. My father's old house, long story. And the chainsaw broke, and the people who helped me couldn't, rub two sticks together. So it spent like 3 hours cutting down a bunch of trees, cut them all cut out, and then tilled the garden over. Well, let's just say it was a busy. If you look at my hands, I'm all cut up and bruised. It's okay. I love doing that. I love getting dirty and messy. Such a switch from my day life. So I get so many questions about what's happening in my life that this weekend was full on garden. And for those of you who want to see the video of my dad and I making sauce, I will have that reposted soon. I know many of you have asked for that. I'll have it posted on mosaicresearch.com. You can go to. It's the cheesiest video of how we make our homemade tomato sauce, but you guys can certainly you'll laugh. I promise you it'll be something of interest. But anyway, a quick market update. A lot happening in markets right now, and what's fascinating, why is the market at all-time high, the Nasdaq, the S&P, the Dow, and yet we're in the middle of a conflict, war, whatever you want to call it. We've talked a lot on this podcast about the war, that the expectations that it would last between 6 weeks to 2 months, but we're right at the 2 month barrier here. Where this morning's headlines are once again that there's a conflict between Iran and the United States about getting ships through the strait. Kind of amazing that for all the bombing that happened against Iran, they still have capabilities to retaliate in some way with what they call mosquito boats. That's a new one on me. Little boats that can hard to sink, I guess, and can go out and attack different ships in the strait. So oddly enough, we're not through this. The expectations were we'd be at the end of it by now, that Iran would go through some sort of regime change, and that doesn't seem to be the case yet. Remember, we talked about the scenarios of U.S. blinking and kind of giving up, Iran blinking and giving up the nuclear aspects that they have, dust, particles, potential weaponry, whatever. That hasn't happened yet. And then finally, when we get a significant regime change, well, that was looking like it, whether it was a coup from the army or the military or a civilian uprising, or the current regime would kind of become more moderate. None of those have really happened yet. So I don't know. It seems like we're in this for longer than what everyone expected early on, and yet the market's at an all-time high. Why? Well, it's actually a fairly simple question. And when you think about why, the easy answer to why is, well, when there are catalysts in the marketplace today that are very unusual, and the primary catalyst clearly is AI. And when you look at AI, whether it's an efficiency issue, and certainly there's that aspect of it, but certainly much more important is the idea that AI spending, that when you look at how much money is being spent on AI today, it could represent as much as 2% of GDP right now. What does that mean? In real context, the average tech spend this year was supposed to be about $500 billion. It looks like it's going to be 30% higher than that. Wrap your head around that for a minute. 30% higher than what we thought the tech spend would be. So kind of fascinating numbers, almost whimsical. How is it we can spend this much on a new technology that, while we're all using it, and it's certainly having an impact, how comfortable are we using it? How much productivity are we getting from it? And we've talked a bit about productivity on here. We did a really excellent productivity numbers from the United States in the fourth quarter of last year. But I don't know you can give all that to AI. That maybe certainly there's an aspect of it, but how much of it could really be said about that? I'd argue that certainly of this success in the market right now, I think a large portion of it is from of this idea of what AI can become. And when you think about earnings impact, so certainly it's having an impact on how much companies make. But there's no doubt about it. When you look at the S&P 500, we're putting up an earnings season that's quite incredible. Anywhere from 10 to 20% earnings growth, depending on the sector. That's why the market's up. So in spite of the headlines of the war, despite of the AI spend, which is a part of it, no doubt about it. By the way, the cost of building out AI are rising. The cost of building a data center, the cost of getting power, the cost of getting the parts, well, that's getting more expensive. So how much impact can the AI spend have when having to spend more to do it? I'd argue it's much more than that. I think it's the United States in and of itself is in much better economic shape than I think given credit for. And for example, last week we saw initial jobless claims for people looking for unemployment benefits fall below 200,000. We haven't seen that in 5 years. We saw continuing claims fall below 1.8 million. We haven't seen that in 5 years. So we're seeing data, earnings growth on the S&P 500. I mentioned it, but profit growth around 13%. So why is the stock market doing so well? It's because the economy is in pretty darn good shape. In fact, right now, when you look at the S&P 500, just in the month, just for the quarter, the month of April, now we're just into May here, we're up 10.8% on the S&P 500. It's been all about tech. Remember, early in the year was everything but tech. Now it's all about tech and the big names. And Nasdaq's up 16% for the month. And why? Because the data suggests that the Mag 7 companies that reported, by and large, not all of them, look quite strong. Heck, even the Russell 2000 stuff, the one of my favorite areas, small cap stocks, up 12% on the month. And in fact, when the year-to-date number is 6% for the S&P, the Dow up almost 4, the Russell up the Russell 2000, the winner so far, small caps up almost 14. But growth stocks rallying. They were down 13%, now up 1.64 in a year. My point is we're in the middle of one heck of a rally. Why? It's not just because of AI spend. It's because of the strength of the U.S. economy, in spite of what's slightly higher gas prices, is not it's not become relevant. And when it comes to gasoline, it just doesn't show up in the data. Think of it this way: we spent about $29 billion on Valentine's Day. We spent about $28 billion on Easter, and we're going to spend over $31 billion on Mother's Day. While the consumer's not happy about spending more on gasoline, I mean, I myself filled up my truck and I drive a Lincoln Navigator and I love it. I fit in it. I'm 6'4", so I need the extra room. And I was clearly on E, and normally it cost me about $60, $55, $60 to fill it. It cost me $90. That's a lot of money. That's $30 I didn't have to go spend on something else. So that does have an impact. But remember, we use less gasoline today than we ever used before. We use less. We're more energy efficient. We have alternative sources of power. That's why the world has hung on quite well. You look at what's happening in the rest of the world. There's lots of countries who are mitigating the impact of the war by 4-day work weeks, like the Philippines, or rationing fuel, like they do in Asia, and it's basically held us on. There's 18 million barrels that more or less have become restricted because of the war. What's not happening is it's not showing up in the data yet, other than gasoline. Will it eventually? Sure. There'll be a spillover effect eventually in other areas, whether it's fertilizer or foods, and that's when things will really get messy. But we're not quite there yet. And even the bond market, for all the concern about this war, people have not rushed into bonds. We're still flat on the year in bonds. So there's no real flight to safety that's happened. And I think we'll have this environment where things are better than they are, and the market knows that, but the average person looks at the market and doesn't. That's my message for today. We always talk to you, don't let the headlines get in the way, But the reality is, I think you've been swayed into thinking things are much worse than they are. For example, I talk a lot about PCE, personal consumption expenditures. It's the most important aspect that the Fed looks at. And it was higher when it came out last week, 3.5% year over year to 3.2% core without energy and food in it, which is higher than we want it to be. We want that to be around 2.5 to 2.7, but wasn't higher than what was expected. So it became kind of a non-event. Here's an important one, ECI, Employee Cost Index. Now that one was up 0.9. That one tells me that how much it's 3.4% year over year, slightly higher than inflation. I like when that one's higher. Why? Because it means wages are still beating the rate of inflation. Why is that important? That means the consumer can hang on. Remember, everyone got a big tax refund here, depending on how much you make. And now you had to pay for higher gas prices, so they're kind of balancing each other out. But if wages stay above the rate of inflation, then things are much better than anticipated. And then finally, manufacturing. Manufacturing came in quite strong again. We're still looking at the U.S. manufacturing sector is now in expansion for the fourth month in a row. We haven't seen that in a decade. That's really exciting news that a different aspect of the U.S. economy is starting to grow again for the first time in a long, long time. The Federal Reserve came out and said they're not cutting interest rates. It looks like Jerome Powell's tenure as Fed chair is over. Kevin Warsh more than likely will be stepping in soon. But I think ultimately we get us to a place where, probably that headline of the Federal Reserve is out of the way too. What does it mean? It means, yeah, there's always volatility in markets. That's normal. There's always something to worry about. But the market's got an uncanny ability to climb the wall of worry. And for all the worry that might be out there, there's just not a lot to worry about right now. I mean, the war can become one, but today I would argue it's not. And that's kind of my opening salvo to everybody that, the old, what was that? Those shirts we used to say, don't panic or carry on, whatever those things were. That's kind of where we are. There's not a lot to worry about right now. And for the folks that want to worry, you can worry yourself all you want, but I don't think it's justified. I just don't think we're in a place today where it makes sense to worry. So with that, I want to bring in my new friend, Raph. How you doing, buddy? Come on in.
Doing well, thank you.
Raph, first of all, who the heck are you? Let's tell the gang who's listening in today where you come from and what do you do there?
So where I come from, well, my mom was a Jersey girl, not far from
Nice.
you. Grew up
Nice. I
on
love it.
McCosh Road, in Montclair, right near the state college there.
I love it.
Um, yeah, but I grew up mainly in Buffalo, New York. Wanted to be a journalist, and I was one for a long time. So I was a reporter for over a decade. I was at the Philly Inquirer, the Bergen Record, right down the road from you there in
Oh wow.
Hackensack.
Yeah, 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 yeah.
Yeah, yeah. And I was at the Boston Globe, where I really cut my teeth there on investigative style journalism, which is the real deep dive, when the powers that be don't want it out and you've got to work, work, work and find sources and really sniff around and burn a lot of shoe leather. That's what I got good at that paper. Uh, and I was actually a government investigator for a while at the Massachusetts Office of Inspector General. I was chasing down cases of waste, fraud, and abuse of public funds. And, I was at that office, and a guy who ran a very small hedge fund here in Boston took me aside at a brunch. I had just met him really, but our wives had had our first babies at the same time. They met in the mother's group, and I was over at their house. And the guy said to me, he said, you know, have you ever considered working in finance? I said, no, I have no financial background whatsoever. I'm not particularly mathematically inclined. Why do you ask? He said, because I think with your skill set, you could be a heck of a researcher at a hedge fund. And my ears perked up because I had one kid and then now I had another on the way, and I had to think about the future and about doing a little better than I was doing at that time, in industries where you don't get paid a lot and the future is murky because it's either politics and government or it's media. And at that time, we were transitioning from, the print model to the digital model, and the whole business model was up in the air. There were buyouts and stock prices were going into the toilet. And so I gave it a shot. I worked at a hedge fund here in town for 7 years. They were a value oriented shop. They had never had someone like me around, particularly who had news experience. But at these hedge funds, they take very concentrated positions quite often. And Mark Twain said, "Put all your eggs in one basket and watch that basket." And that was kind of the idea here. And a lot of it was on the short book too. So when you're betting against the markets, the markets are built to go up and to the right by and large. And you know, your whole opening kind of talked about that. It's like, you know, there's growth, growth, growth that creates growth in earnings, growth in revenues, you name it. This is largely a good thing for companies. So when you're betting against them, you got to work twice as hard as the next guy or gal. So, you know, they had us on there a lot of times just to kind of maybe beat the quarter on something. You know, it was kind of channel checks and things like that. But I got over to BNY where I am now because they had a very interesting idea, which was to try to use me for research that could last not a couple of weeks into the quarter, but for a year or two, something substantive about the very essence of a company, its sustainable competitive advantage. You know, how deep and wide is that moat? The kind of research that once you feel comfortable about something that's kind of nebulous and qualitative, you can monetize that for a couple of years and move on to tougher questions. So that's what I've been doing. I've been at the BNY family now a little over 12 years and just having a blast doing it.
Wow, that's a wild background. I mean, full name Raphael. We go by Rafe. I said, like that's a cool, trendy name. Very fun. But you got a really cool background. I mean, a news reporter, government investigator. By the way, we could do a whole thing on government investigation and fraud. I mean, that'd
Yes.
be super exciting. And now BNY, and to my friend's credit, Lauren Corona, who put us together, I love Lauren. And for the folks on this podcast, I should have her around one day as a guest. She's just one of the smartest, kindest people I know. I love that kid. That's
Wonderful.
cool that since she's over there with you. But did you have any? Well, hang on. Wait. We got to back up. Wait. How many kids? Two kids?
Two kids. Yep.
If you don't mind my asking, how old are the kids?
Oh, no, that's fine. I got one who's 21. He's going to BU, studying
You, nice.
psychology. And I got a daughter who's 19 in Dublin, Ireland, at Trinity College Dublin, studying English and philosophy. So,
Wow.
yep,
So
totally
how was
different.
your week? Wait, what'd you do for your weekend then? You were empty nester, I guess. You're not far from the BU kid. Does he come home on the
Yeah,
weekends?
no, the BU kid lives here because it's actually our apartment. We live in the Fenway neighborhood. Our apartment is closer than some of the dorms to where he takes classes. So that's been fantastic.
Saves a lot of
Yeah,
money that way too.
my weekend's hockey. I'm a big NHL fan. You know, I grew up in Buffalo. I went to
Uh,
college in Canada. You know, I have a, you know, pucks for blood. So that's
Hang on, are you a Sabres fan?
I am.
Oh my God, I didn't see what happened this weekend. I was so busy. Did they win? Did they advance?
They advanced for the first time since my daughter was 6 months
Yes.
old. They actually
Yes.
advanced in a playoff series. So my kids have never seen me watch playoff hockey. It's scaring them to death.
Oh my God. That's amazing. I'm a huge fan of that. That's so funny. Oh my God. The podcast today is gonna be like, we're gonna bore them to tears. But the Sabre story is great. It's like, you know what this done to the New York Jets, by the way? That means they're the most feeble franchise in all our professional sports because we haven't been in the playoffs in so long. But
It's been a long time.
I like hockey a lot too. I have a little nephew that played high school hockey, little Lou Chulo, my buddy, and he went all the way to the states semifinals and lost. But a big Devils fan, so I'm pulling for the Sabres. I'm super excited for you again.
Wow.
I'm
Well,
in. I'm on.
welcome to have you on the wagon.
I love the colors, the blue and yellow. Awesome. I'm on. I should have watched this weekend. I was just too busy messing with the dirt. So let's go back to this guy. Thank you for that. We always love making it fun. So how did you didn't really have any financial training, and you jumped into finance and business. What did they see in you that thought you worked with a hedge fund? How did that make sense that for you personally? Why'd you want to jump, and what did they see in you that made you want to jump over?
Well, what they assured me was that my skill set really fit in nicely with what they are lacking in their own skills, most investors. So if you think about your best stock pickers out there, your best investors, these are people who like sitting in front of their screen. They're lone wolves. They don't really love going out and talking to people necessarily. They are sitting there constantly crunching the numbers, thinking about scenarios and possibilities. What could upend them? How could they get an edge on the market? All this stuff. You know, they're constantly work, work, work alone. What they're not built to do is when a question comes up where there is no data, there's no real priors that you can, you know, use except your gut. They're not really great at figuring out who are the experts I can even talk to. How do I ask them questions in a way that my own biases don't get in the way? You know, because by the way, I'm an investor. I spent 40 hours working on this thesis, on my model, talking to the management team. I talked to the competitors' management teams. You know, I read all the sell side research and talked to all the broker research people. I went maybe to some investor conference, and I talked to a lot of my peers and I heard all that, but I've taken it all in, but I still can't get over the hump on the conviction about something. Maybe it's an acquisition and you're not sure about the synergies. Maybe it's about a new regulation or a law that's coming through. Maybe it's some other bad thing like a CFO leaving or a new CEO coming in. And what are you going to do with that information? Well, these folks, they're not really built to do that, and their time is not right. They can't sit around the phone, for 2 weeks waiting for people to be getting back to them. These people,
Yeah.
time is clearly money, right? It's just inefficient. So where I fit in is, what are reporters good at? Reporters are good at coming in the morning with no expertise at all, and by the evening being pretty darn good on a topic. They've found a bunch of people who know what they're talking about. They've asked them questions and kind of played devil's advocate. They put it all together and they analyze this to come out with a narrative, a fact pattern. And it turns out that is exactly the kind of research that a lot of investors need when stuff gets weird and you just can't get over the hump unless you find out what people with subject matter expertise think about a situation. So, like an example from when I was at the Bergen Record, right? So, an editor comes up to me one morning. He said, "I want you to fly down to Florida. There's a hurricane barreling in there right now." I was like, I don't get it. We're a regional New Jersey newspaper. What's going on?" He said, "Well, there's a lot of Jersey people down there. So go down and get the Jersey angle." So I hop on the last flight into Fort Lauderdale, and I'm scrounging around everywhere, and I'm not finding anyone in Miami or Fort Lauderdale. It's just not. It didn't feel like a story. It wasn't good. I was talking to people, but it was tangential. I drove across Alligator Alley in the middle of the night. There's like literally tornadoes trying to touch down by my car. Driving a Ford Aspire, three cylinders. I had the pedal to the metal. It wouldn't go above 75 miles an hour, but I outran the tornadoes. And I show up, and through the mist in Naples, Florida, I look up, and all of a sudden I see a restaurant bar called Jersey Joe's. And I'm like, this has got to be it. And I pull in, and sure enough, there's a guy named Joe behind the bar who's from, I think it was Hoboken. Everyone around the bar was from Jersey, and I hit pay dirt. But like, that's kind of what you need in qualitative research. You just have to run, 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 no matter how many people are trying to tackle you. You got to keep the legs driving. The doors are slamming you in the face, and you just got to keep going until you get answers. And that's why it fits in. Does that make sense?
It does. It does. Forgive me. I'm going to simplify and say, sounds like you find a way to communicate with the investor much more effectively than what that PM can do. It's almost like you're a bridge between the two of them. You're making it easier to understand if I'm getting, or tell the story better. Am I getting that right?
Well, I think that's part of it. I think often what happens is you have an analyst who pitches a stock, and the portfolio manager says, "Well, I like it, but here's how I could love it. If you could really
Ah,
make me feel good that this new CEO coming in is the master turnaround artist, operator that everyone says they are, then I'm all in. But my worry is they're a great delegator. They got way more of the credit than they should have gotten." Talk to people who know this guy or woman, who've worked with them, who understand their leadership style. Find out whether they deserve the credit for what happened at that last place.
oh, I see. So you were
So I
really a
have, yeah,
deeper
find
dive. I get it.
sources. Yeah.
Okay.
So I'm
A
like
deep,
I'm an independent set of eyes and ears that can settle a dispute or a controversy.
almost
And
validating it.
yeah, and a lot of stocks, there's a reason why you might have your opportunity. It's because there's a debate going on. The market's not fully bought in on the narrative. So if we can get an edge and talk to people, all compliantly, of course, I'm not looking for inside information. It tends to be very informed speculation and opinion by people who don't even know they're experts quite often. Their spouse doesn't think of them as an expert. Their friends never ask them what they do. Their kids don't even understand their job title, but I found them on LinkedIn, or I found them at a trade show. And I see that they have 25, 30 years doing this thing. They understand it cold. And I come calling, and I want to hang on every word they say.
Wow. I get it. A bit more conviction. That makes sense. I love your
Yeah.
title. If I got this right, head of specialty research. So it really is. So maybe let's pivot for a second. So for the folks who sit here and how do I pick a good stock? It sounds like you're helping that PM maybe get over the hump or take a different lens through it. What does your team have the impact? Like what does your research do for the final decision?
It's a great question. So I call us. So the particular discipline we're talking about here is called investigative research. The idea is that we're taking investigative journalistic techniques and applying it to financial research. And us doing it at a long only, kind of mutual fund, active ETF type shop, an active long only shop. It's very unusual. There's only a few probably out there
Yeah, I
that
was
do
going
it
to
at
ask you, are
all.
you guys unusual? I mean, I never knew Bank of New York did this, so good for Lauren
Yeah.
for putting us together. But it seems like you guys are a part of a pretty special area in that way, then.
It's pretty special. There's some hedge funds out there. And like I say, they take much more concentrated positions or they're taking a much more short-term view. There's some, information dislocations that some hedge funds, or just the way they're built, where it makes a lot more sense for their business model. But we wanted to truly differentiate. Our idea was if we wanted to be active, truly active managers, well, you got to get up off your behind. Active doesn't just mean having a human buying or selling it. It means actively trying to figure out what reality is. That's how I would like to define it and how BNY defines it. So we're trying to go the extra mile, quite literally. That's the idea. Um, but I think I lost track of the question, though. I'm
No, no,
sorry.
I know
Yeah.
you're spot on. That
Oh,
it's
okay.
if in that way that if you guys are doing something unique and different, especially for a firm that isn't a hedge fund,
Yeah.
but then you go on top of it this sort of investigative journalist piece. I'm wondering, does the PM take your information and that helps make the final decision? Is it
Right.
collaborative? How does that come together?
Sorry, yeah, that's the thread I lost. So I call us investigative. I call it the last mile. The last mile is the hardest mile. Like you look, if you've ever had your kitchen renovated or something like that. I was a reporter here on the Big Dig in Boston, like that giant
Oh
project, right?
gosh, yeah, that
So
thing.
the first 90, 95% of a project goes pretty well. The last 5% takes as long as the first 95% because it's really tough to nail down stuff like that. And it's the same in research. They can get pretty far, these folks, but they hit a wall. That's where we fit in. So we are a sliver of the investment mosaic. So if you look, I believe you guys have our dynamic large cap value product.
We do. I
Um,
mean, you guys have excellent performance. You're a great firm. So I'm thinking this is what's driving some of that.
I mean, that's the hope. And here's why, because they have a kind of a three-legged stool approach to investing. One of them is valuation. They want to be true. They want to stay in the style box of value, right? I don't get involved in that. That is the last thing I should be touching. I am not getting involved in whether a stock is cheap or expensive. Another one is business fundamentals, cash flows, earnings quality, good use of capital. I'm not necessarily so involved in that either. That's really something that they're coming up with by, going over the balance sheet, talking to the management team, understanding this business back and forward. And then the last one is business momentum. That's the third leg of the stool. What's changing on the margin that's going to send this story different? That's the catalyst, right? That's where I'm getting involved. Quite often is what is the street missing? That is a very important sliver of the mosaic. Now, it is not the entire thing. Like sometimes they're going to build a position before I get involved at all, even if it's a stock with a significant question on it, because they really like the valuation, they really like the fundamentals. The question is on the momentum quite often. So they'll get a starter position going, and then they'll say, Rafe, can you please go out and either validate or beat up our thesis here? So like United Health, that thing was hurting last year, if you remember, last
Yeah,
fall.
yeah, for sure.
They had the former CEO from GlaxoSmithKline who had come in and was running the company. They were in the Wall Street Journal for all kinds of allegations of fraud on their Medicare Advantage business. The stock was in the toilet. All of a sudden, they bring in the former CEO, and I was kind of alluding to this earlier a little bit. Um, and so the guys on the dynamic large cap value team said, does he deserve the credit for what happened at United during the glory years? Because if they're bringing him back and he deserves the credit, then this is a huge trade up. And, we've got a company now that's going to be in phenomenal hands, better than maybe the street could anticipate. And also, would you kindly look into this Medicare Advantage stuff and find out what's going on over there? And that's what I said about doing. So I find all kinds of experts in that realm. So I found people who worked in and around the C suite of United when the former CEO, who's now returned, is back. And boy, they loved him. They said this was fantastic. And by the way, this Glaxo guy, he never even bought a house in Minneapolis. He was barely ever visiting the headquarters. Morale's been terrible around here. The culture's gotten bad. This is going to be great to get the band back together. So I was just hearing a bunch of great qualitative stuff like that from people who really should know. And by the way, who don't even have a dog in the hunt anymore. I don't talk to current company employees, right? These are people looking in the rearview mirror and saying, wow, that guy, Steve, what an operator he was. What an executive. This is fantastic. I'm going to stop selling my shares. Like, these are wonderful things to hear, right? So then I can tell them this stuff. And that's when they kind of build a full position and, off to the races. It's worked out very nicely since then.
That's cool. So it really gives the PM an alternative way to look at what the final decision is on a stock. You're getting anecdotal information or information they're not going to see in a balance sheet, but you're going to give them things that are really fundamentally important to the company. It's very powerful. So, question then. How often is this used when the PMs look at this stuff and then they come to you on every stock? Is it better for small cap names? Is it just a pure play and large cap? Where do you apply this thing?
Great question. So for example, for that dynamic large cap value product, no, I'm not on every name, not even close. This is really, like I say, it's the last mile, and it has to be used sparingly because I am and my team, and I can go into them, but we're all humans. We can only handle 2 or 3 projects at a time, and it's just not scalable, right? So it has to be used in situations that really matter. And also, quite often you can get there. Like these guys have had some overweights in the finance realm in particular for a while. They often can get there without needing me. They got a position in like Berkshire and JP Morgan, and they just feel great about those. The data is, and everything they're seeing, they don't feel like they need me on, right? Um, I will say I got to the company originally on a team that only did small and mid cap US stocks. And it really does make a ton of sense for that cap range. So that was a smart question that you asked. I mean, the fact is there are fewer eyes on small cap names. They're also much more of a pure play usually in whatever it is they do. So if we can get to an answer, it's really usually a situation where fewer people have tried to get the answer or could have succeeded at getting the answer. A. And then B, it's probably going to matter more for the whole business, right? Whereas if I do something on United Health, it's a massive conglomerate, right? I mean, it's in the Dow. I mean, there's only so much you can do in and around that. So it has to be a tightly focused question on a large cap quite often, or it's different. But we do it across geographies, across styles, across cap range, you name it. We do fixed income projects sometimes too. It's all over the place. It really depends on whether the question is answerable.
Wow. That's very cool because you end up in this scenario where it's like the secret sauce. You guys are giving them a little bit of an extra. You go to Chick-fil-A, you need the special sauce. You
Yeah.
give them
Well, you know what we
the
call it here? We call it our multi-dimensional research platform because what we're trying to do, like a piece of real estate, what's the highest and best use of that real estate, right? Like that's always the term they use in that industry.
right.
Well, what's the highest and best use of an analyst and a PM? Well, it's finding new ideas, sitting on top of the ideas you have, and knowing when to buy, sell, or hold, right? That's what they're best at. So we're trying to surround them with these specialized tools where when it push comes to shove, we don't want them being inefficient with their time and doing something that even if they could do well, it's not the best use of their time. So, for example, some of them might be good at doing quant analysis, like natural language processing and digging through earnings calls and 10Ks and Qs to kind of find, incremental changes in language and that kind of stuff. Yeah, but we have a quant team that does that stuff for them or that screens ideas and factor exposures. Like, hey, do you realize how much AI exposure you actually have versus what you think you have? We want the quant team doing that. Or, if you're not really sure what the credit markets are telling you about your stock, well, we have our credit team that can work on that. We have a responsible investing team that can dive into some of these governance questions or maybe exposures on certain environmental stuff like let's call it forever chemicals. You have a 3M or some of these other companies, Monsanto with their litigation issues. So we want people who can do this stuff, who are purpose built to do this stuff. That's the idea. That's that multi-dimensional research platform. And a big piece of it is this investigative stuff. Let's not
Very
have
cool.
them getting their boots muddy when they don't have to.
Yeah, yeah. Certainly a different angle because in a world where you got to have, your single best ideas, you're paid on performance to a great degree. You got to have the ability to add a little secret sauce to give them an alternative advantage, an advantage beyond what the normal person gets. Maybe we'll wrap up with an example or two besides United Health. Is there another some project you might have worked on where this was fundamentally important beyond what you've already mentioned?
Sure, and there'll be a shameless plug involved here as well. So I have a podcast that I co-host with one of my investigative colleagues, this guy named Jack Encarnacio. He's the former chief investigative reporter for my Boston Herald, the rival to the Boston Globe, where I was. I met Jack as when he was a student reporter, straight out of Emerson College, and I just thought he was terrific. And I got a chance to get him, and I got him. But so he and I, we co-host a podcast called Double Take. You can find it wherever you find podcasts, but it might sound like a marketing vehicle or something like that. It is not. What it actually is a Trojan horse for our research. So you might recall when DeepSeek came out of China, and
Yeah, yeah.
everyone was freaking out, right? All the AI stocks were plummeting. Everyone thought, oh, the whole AI story is going to implode before it even had a chance to work. This the whole idea of all this growth coming out of the Nvidias and all this isn't going to happen. All the stocks are getting hit. So Jack and I, because of the podcast and because of our kind of media DNA, we can get media credentials at conferences and events that are not open to investors. They are open to people who take part in these in these trades. So we found a trade show down in Washington D.C. called Data Center World, and we got in because we could get media credentials for the podcast. So we go down there with our mobile reporting equipment. And everyone we're talking to, these are people selling wiring and cooling and racks and electrical connectors and you name it, chips, everything. Nvidia was there, Google was there, no investors there.
Hmm.
And it was just so amazing to see because as Wall Street was shivering in its boots, the vibe in that room was the most bullish thing I have ever encountered. Business was flying. People were transacting like crazy. There were so many people attending. It was 50% more attendance than the year before. And this is a few months after DeepSeek. They had to bust
Wow.
open the ballroom to allow for more seating for the keynote addresses. And everyone was talking about how their book of business, like the pipeline was incredible. They felt really good about it. No one was losing sleep. They felt like this was rock solid demand and that it was not going to slow down. And so this was a tremendous thing that we could report back to our investors, all while there's all these dislocations in stocks. And then, the podcast episode comes out a couple weeks later. And so everyone can kind of hear how we do it and how we talk to these outside experts. So, in that sense, it's marketing, but really we're using it like that. So, we can go in rapid fire SWAT team like when things are changing and try to gain a little clarity. And the idea is you kind of have a 50-50. Almost everything is binary in a way, right? Like, so when DeepSeek comes out, it's binary, it's a coin flip. Is this really bad for AI or isn't it? Like, that's kind of what it boils down to, right? Well, we can then go down there, talk to all these people whose life, their bread and butter is AI, and come back feeling like, maybe it's 65-35 that this thing, it ain't 50-50 anymore. Is it 99-1? No. Is it 100-0? No. But I mean, incrementally, a lot more bullish than we were when we got on the plane to go down to Washington for that trade show. So that's the kind of thing we do. It's really trying to be useful to these folks, allowing them to get outside of the Wall Street echo chamber, talk to real folks in the trenches of industry to offer a different point of view. And so, yeah, there's another one I could give you where right in this portfolio, last fall, Freeport McMoran, the big mining company,
Yeah, yeah.
they own the second largest copper mine on earth. And there was a terrible, what's called a mud rush event at their, what's called the Grasberg mine in Indonesia. I'm no expert on Indonesia. I'm no expert on mining, and I'm no expert on the Indonesian government. But all these things needed expertise for these guys because they owned Freeport. The stock had taken a leg down. And this is one of those moments. Do you just sell it? Is this a thesis breaker? Is the Indonesian government going to come and just kick Freeport out and take complete control of the mine, management and ownership? And by the way, is their guidance conservative or aggressive when they say that sometime in mid 2026 it should reopen fully? Well, so that's what I have to do. I start making calls to tons of people in and around Indonesia and mining, asking them these kinds of questions. Is the government going to use this as a pretext to take over the management of the mine? Um, are they going to reopen on time? What we heard again and again was Freeport is the only company that can manage this mine globally. It's a very complicated, massive operation. And if the Indonesians did try to take control of it, it would suffer badly. And that would be a bad look for them. We also heard that they had a fantastic record, the company, in terms of providing reasonable guidance, and they had plenty of it, right? Because I mean, mining's a dangerous business. Things happen, and they have a track record. And people who knew the company, and I even spoke to a guy who managed that Grasberg mine for like 10 years, who then had moved over to Rio
Wow.
Tinto. What a great expert he was, And and what's really neat for me to hear is when he said, "You're the only investor who's reached out to me," and I just love stuff like that. If I
Yeah,
can get
sure.
out in front of people. So those are a couple examples.
It's just great because you're garnering information that I think the average investor doesn't think about. And in your case, the portfolio manager needs to make a better decision. So that's really fascinating. Well, that's the power of Bank of New York, right? You're bringing them something that helps add real value in a way that it's not a balance sheet. It's not just listening to an earnings call. It's not just gauging the marketplace in comparable companies. It's doing something beyond the normal of stock work. That's fascinating stuff. This was awesome. I hope you enjoyed it, buddy. This was a lot of fun. I hope
I had a great time.
if you were going to leave the average investor who's listening today, when they go to pick their own stocks, any final advice you'd give them as to looking at stocks for your lens or what they could do on their own if they don't go into some folks buy products from Bank of New York, but some like to pick their own stocks. What advice would you give them?
Well, that's a great question. My advice is to lean into your humanity. And by that, what I mean is AI is powerful, technology is powerful, and there are firms out there buying every kind of data you can imagine. So getting an edge by trying to read smarter or by gobbling up more and more information that's available somehow in data feeds or on the web somewhere or something like that, you're not gonna win. So where can you win? You can win by using your human brain, your human abilities, and your human intelligence to talk to people, because that's where the computers can't go. If you look at a large language model, it's entirely backward facing. It's
Yeah,
just
got it.
hoovering up information that's written and then synthesizing it and kind of aggregating it and analyzing it, right? But it's not predictive. So, how are you going to predict unless you talk to people who've been through this rodeo before? Pick up the phone, write an email, try to talk to some people who might know better than you, because chances are you're probably not an expert at this industry that you're investing in. And it's these intangibles, I think, that can often drive a stock.
You're so right. Funny, I say something similar, not about the same. It's almost an add-on to what you're saying, which is you always want to buy companies that you personally know and like. So that's your intent, right? You bought the product and you love the way it worked, or you use Spotify. I'm not recommending Spotify, but you like the way you can its versatility and suddenly in your mind it makes some sense and you go do some research. So I think you're spot on. It's one thing to know the data, it's another thing to think about why is it working beyond the data? What makes it interesting? And I think you're at its core for the folks who don't know a company, the way you're looking at it, the way for them to find out. It's amazing. Thank you. This has been really fun. Oh my gosh, good for Bank of New York to having a specialty journalist, if I'll call you that, the specialty research. I think it's very cool, buddy. Well, it's that time. We got to do shout outs. Shout out of the week. I'll wrap up our podcast this week. Anybody in the world or personal life that you'd like to give a shout out to?
Well, like I said, I'm from Buffalo. Like I said, I'm a hockey fan. So, I mean, I would be remiss if I did not shout out the Buffalo Sabres and their long suffering
Love
fan
it.
base. It's
Love it.
been a long, long
Long
time. These
time.
guys are good. So root for them against the Montreal Canadiens.
Yeah, I don't want the Canadians winning. No, I'm not a fan. I'm gonna give three. First, my friend Lauren Corona for putting this together. Good for you, Lauren. But the my real shout outs this week are I'm gonna get her name wrong, but Cherie Duval. I think that's how you pronounce it. And she is the owner of Golden Tempo. And why I mentioned this, I did get a chance to watch the race. First off, a woman who can break the glass ceiling in traditional sport that is very male dominated in the ownership of thoroughbreds and horses in the Kentucky Derby. Good for her. The first woman owner to win the Kentucky Derby. But I got to give it to the animal too, though. Golden Temple was the last, started last. And it's such a great example of perseverance and hard work. And when you win, it's not the win, it's the result of what got you there. Obviously, great ownership, excellent training, good genetics. And that horse went from last to first and won it at the end. So good for Golden Temple for winning the Kentucky Derby, and even better for Sherry Duval, on being the first woman owner of a horse in the Kentucky Derby. That's pretty cool. Thank you, Ralph. This was awesome, buddy. I really enjoyed it. Ray, excuse me. Thank you, Ralph. This was awesome. Thank you very, very much.
My pleasure entirely. This was great. I'm a listener now. I've been taking in a bunch of your podcasts. It's a lot of fun.
Oh, I appreciate that. I can't believe how many people listen. We went to an event the other day and we asked a room of about 100 people how many listen to the podcast, and then 95% put their hand up. We have something like 15,000 people listen every week, which is cool.
Well,
I would,
speaking about leaning into your humanity, you make this very human. Like I feel like I know Phil after listening to a few episodes. Like I get this guy. Like I want to cook
Thank
sauce
you.
with him.
Thank you.
Yeah.
That's exactly what we're all in this together. We have fun, but that's my hope, is to make this easy for folks to understand, and have fun while we do it. And next week will be fun because I'll have the kid on. My daughter, Luca Blancato, will join me as a graduate of the Terry School of Business in just a few days. Thank you, Rafe. This has been awesome, buddy.
Thank you.
Take care.